Let's turn now to Apple, rising another 2% for its fourth straight day in the green. Jefferies upgrading the stock to a hold, with analysts writing that the company could top June quarter estimates thanks to better China iPhone sales. Still, they cite long-term risks, with investors underpricing the impact of tariffs. Their updated price target of $188 a share, implying 12% downside from today's close. Of course, this is a move from sell, so it's not exactly a pound-the-table upgrade here, but it is interesting. It times also with the call from Carter, which is a reversal of him saying sell Apple, 3 years ago. Yesterday, he said it's a buy for the short term.
Yeah, and he said a short-term buy up to that moving average, about 223, is a good call. I mean, it really held that $200 level. I think that there's not a lot of catalysts right here. And I think you could say, well, the sentiment's really bad when you have someone like this guy who's one of like 5 sells on the street, which is kind of weird for Apple, by the way, that it has 5 sells. You look at the rest of the Mag 7, I think like 90% of the ratings are buys on all of them. So, kudos to this guy, depending upon where he put it on. There's going to be a pull forward. I mean, the Q2 for a lot of these companies is going to be better than a lot of folks thought in early April, right, when they're selling stocks or tripping over themselves to do so. But the back half of the year for a company like Apple is going to be a problem. They still don't have an AI strategy, so that means that a product that has not been growing for the last 3 years is not going to grow again. I mean, literally, they're going to miss an entire year of a product cycle. So I think there's probably better, growthier places to be.
So I find myself agreeing with Dan, which is obviously not. Well, he is a ray of sunshine, so I like that. So great call by Carter, also Katie Stockton as well. But just in the last thing we just talked about, asset light and some of the other problems that they don't have. When you think of who has a supply chain issue the most out of the Mag 7, right, and tariff issues, and they're just in the crosshairs of that. Not my least favorite, I think, of the Mags.
Another element is just the service revenue slowdown or threat, that looming threat, whether it be regulatory or just in terms of like gross dollar amount. I think that's really what's concerning, because I think, at least from my vantage point, that's really what gives it the premium multiple. And so unless we continue to have momentum where it's strictly about allocating, but Apple specifically, I think that is the looming threat that I see.
That's a big reason why Craig Moffett is still at a sell on this one. But you're a little bit more bullish.
I tend to be more glass half full on this one than the folks around me. And it's because I just don't think Apple's priced in anything other than a services business that's made the multiple overall very expensive. But there's certainly no valuation to AI in here. There's no ability to say that they've really rallied on what's been the driver for tech for the last 2 years. There were some headlines today also that the Chinese are bringing home some of the developers from India, which is going to complicate Apple's plans to actually be able to really outsource a lot from China into, who knows. I still think we've priced a lot of bad news on China. The biggest issue with Apple, the biggest issue is its multiple, and that should be enough for most people. But again, there's nothing here we don't know about this story. There's a lot of upside to the world's biggest handset maker at a time when at some point AI in your handset is what you're looking for.